Hello. I will provide some explanations that are a continuation of the main topic discussed in our previous videos, aimed at individuals and families living in or planning to live in America, as well as those conducting investment research.
Mortgage for financial assets outside the USA. E1, E2, EB-5 visa holders, foreign nationals, and those with minimal or no credit history can obtain mortgage loans for assets located outside the USA. Especially for foreigners, with income and financial assets in foreign countries, it's possible to secure mortgage loans ranging from 50 to 70% of the property value without the need for a U.S. green card, U.S. income, Social Security number, SSN, or U.S. credit scores, FICO, for U.S. banks. Loan amount, between $300,000 and $8 million US, available for up to 4 properties. For purchases, a down payment of 30 to 40% is required. Fixed-rate loans. Fixed-rate loans offer the advantage of low down payments, as low as 5%, for purchases or refinancing, allowing you to reach up to 85% loan-to-value (LTV) ratio. For primary residences, you can purchase with a down payment as low as 5%. Alternatively, you can refinance up to 95% of your primary residence's value. Monthly payments remain consistent throughout the loan term. Adjustable rate loans. Adjustable rate loans are suitable for those planning to stay in their new homes for a limited period, less than 7 years, or expecting an increase in income. They also work well for individuals who wish to take loans in high-cost areas and refinance at a later date. Interest rates are recalculated annually. The rates stay fixed for the initial 3, 5, or 7 years, depending on the selected program and term, and then adjust annually. FHA federally supported loans. FHA loans are government-backed loans designed for economically disadvantaged or commercially bankrupt individuals who meet FHA criteria. They can be acquired with as little as a 3.5% down payment. Generally, borrowers should have a credit score of at least 580. These loans are a good choice for individuals facing credit score challenges or with limited savings. Special FHA loans are also available for renovating existing homes or building new ones. Refinancing options are available as well. VA loans for veterans and service members. U.S. veterans and their surviving spouses can finance up to 100% of a home's value without down payment, appraisal fees, or private mortgage insurance, PMI, within a short period of around 21 days. Competitive interest rates lower than traditional rates are applied routinely. 203(k) Rehab loans. The FHA 203(k) loan covers rehabilitation payments for home repairs before moving in or refinancing. Up to $35,000, sometimes up to $50,000 under certain conditions, credit support is provided for completing home repairs. USDA, for properties in rural areas, loans. The USDA Rural Development Housing Loan offers 30-year fixed-rate loans at 100% LTV for properties located in rural areas designated by the U.S. Department of Agriculture. First-time homeowners are not limited to these loans, and no down payment is required. Flexible credit rates and rules apply. HECM refinancing. Also known as a reverse mortgage, HECM programs offer those aged 62 or older with full ownership of their property, or a substantial amount paid, the opportunity to secure a credit limit with attractive monthly payments, owning the property and, including property taxes and insurance. FHA Streamline 203(k), suitable for those looking to buy a home needing renovation. Using the FHA 203(k) Streamline loan, you can borrow up to $35,000, sometimes up to $50,000 under certain conditions, for improving single-family properties, electrical, plumbing, and other repairs. Jumbo loans. The adjustable rate mortgage program offers credits of up to $2 million for first-time home purchases, $1.5 million for second home purchases or refinancing, and $2 million for cash payments used by business owners. If you can prove that you've been able to pay housing costs, rent or mortgage, for the last 24 months and have a credit score of 680 or higher, you can access 90% of the first home purchase and 85% of the second home value with portfolio loans. Down payment assistance programs. If you have the income to cover monthly mortgage payments but struggle to afford the down payment and closing costs, assistance is available for first-time homebuyers to ensure they don't miss out on low-interest fixed-rate loans. Refinancing. Lowering your monthly mortgage payment can free up money for saving, investing, or other expenses. If your interest rate is 1.5 to 2 points higher than the current rate, refinancing could be considered. When rates are favorable, you can refinance to a lower rate or longer term to keep more money in your pocket each month. Our refinancing calculator can help you decide if it's right for you. Home Equity Line of Credit, HELOC. HELOCs allow you to borrow against the equity in your home, providing a line of credit based on the difference between your home's value and your unpaid mortgage balance. During the 5 to 10-year draw period, you can access funds up to the credit limit. Generally, you'll only need to pay interest during this period. Repayment begins after the draw period, typically ranging from 10 to 20 years. Islamic criteria mortgage loans. Several financial institutions in the USA offer mortgage loans aligned with Islamic principles. These loans use methods like Murabaha Mudaraba, deferred sales with profit margin, or Ajura leaseback, deferred lease, for home financing. Trust/WACF arrangements and contract configurations allow homeowners to refinance and restructure in accordance with Islamic beliefs, providing an alternative to